Hey guys, what's going on? This is Leo. So today we're going to talk about how to take profits. This is going to be coming from a professional trader standpoint. So I employ a scalp and run technique. That way that I am out of the trade at break even. So once I scalp out a portion with day trading, I scalp out and I've made most of my profits are made from scalping, but with longer term swing positions, what you can do is you can scalp out a very small portion. That way your risk is off. So we're going to talk about that. I'm going to talk about trailing runners and then trailing candle body lows, which is whenever you get a little bit more aggressive with trailing your trades. And then I'm going to talk about why timing tops and bottoms of markets is bad. So what I'm actually going to do is I'm going to flip over to NinjaTrader, which is where I do all my day trading stuff because they allow me to simulate the data feed so that I can show y'all what this would actually kind of look like. So let's go ahead and disconnect from the main feed. Simulated, there we go. All right, so this is just my little lever here where I can control what the price is going to do. So we're going to go ahead and bring the trend down, and then I'm going to buy. So this red line here would be your 50. We've got a 21 EMA here, which is the black line. So now I'm just waiting for price to come on down to the 50. Come on. All right, well, I guess to speed things up here, what I can do is I'll just go ahead and drop a buy order there because it's simulated, right? So I can just kind of do it. There it goes. So now this is going to turn into a bullish candle because I've reversed it. So let's say, in a real life scenario here, you'd be bouncing off of the 50, which is the red line. You have the 21 EMA. You have the top of this range here for support. So that's a nice area that I'd be liking to take a long position, targeting up there at negative 236 for a runner. Why didn't my trade execute? What the fuck?
Order filled.
Okay, well, there it goes. Not sure why it didn't execute there, but you still get the point. So now I'm just going to drag my runner up one tick in front of the negative 236. And so watch what's going to happen here once all right, so first position's out. I moved my stop automatically one tick in front. I'm going to slow this down so I can have a little more time to talk. I'm actually going to raise that up. There we go. So now my position, I can't lose money, right? Because I've scalped out my position, right? I've moved my stop one tick above my entry. These little lines here that you can see is a tick. That just refers to a quarter of a dollar. All right, I need to slow this thing down so I can talk. So, there's no risk in the trade to me now. I can't lose money. I've actually made a little bit of profit. Price is still running strongly, right? So maybe I want to go a little bit past the negative 236 here. In futures markets, I wouldn't, but as far as swing trades go in stocks and equities, I might hold it longer. It just depends on market structure and what I think is going on. So the first thing that I would look to do is I would want to start to trail the swings. So what I mean by that is that's a swing, that's a swing, here's a swing, here's a swing. And so what you would want to do is you would just, you wouldn't want to put it exactly at the low because what can happen is you can get a double bottom. So it'll come down to the tick and it'll stop you out and then it will run. So what I would do is I put it one tick below where that candle body low is, right? And so then as it comes up and I'm wanting to trail, okay, well, here's a new swing, and this is important. So you only get a new swing once it goes up and makes a new high. So it comes down, right? And then it moves and broke this high. So now we have a new high in this trend. So that's whenever this becomes a new swing low. So I would put my stop there. So this is kind of a less aggressive way to trail a position if you want to give it more room because there's a lot of noise in the market. So for example, here you can see how it's just kind of chopping around, but the overall trend is still up. So you don't want to trail candle body lows because now you've gotten stopped out here. So you want to give it enough room to breathe, in essence. That's why you hear a lot of people talking about, well, oh, you don't want to trail your stop because you'll get stopped out of your position too quick and you'll miss the big runs. Well, that's mostly because they don't really know how to properly trail a trade and they don't know how to properly identify these swings. But in essence, what you want to do is give it room to breathe, right? So let's say, for example, on AMC, let's say you're targeting $5,000. Well, you wouldn't want to be trailing the candle body lows, right? What I mean by that is, one tick below this candle body, one tick below that candle body, one tick below that candle body, and so on. If it's at $1,000 and you're thinking it's go to 5,000, there's going to be a whole lot of noise and volatility in there that's going to end up stopping you out. So that's not what you want. So that's why you trail it based on market structure, where the swings are, and I would argue to also look at the EMAs on a higher time frame. Probably the 21 EMA or the 55 EMA. You typically swings that line up around the EMA is going to be very good market support in a strong trend. So I'm going to go ahead and push this up here. So let's see. So we were originally one tick above the order entry there. So I've already made my profit on 15 lots. That's a contract in futures. And so now typically I'd want to be taking profit right there at the -236. And actually, I think it's just going to be one big bar. So I'm just going to go ahead and close that position out there. So,
Target filled.
all right, so there we took profit. So that trade would have, if it was a real trade, would have made almost just under $6,000. So that's 58.75. So I'm going to go ahead and jump off the simulator here. We're going to go back to Trading View. Jump over to Bitcoin here. So this is going to be a real good illustration of what I mean by using the EMAs to help you identify the proper swings. So let's say you got real lucky, right? And you bought in somewhere here on the low. Well, price came up here, made a high, put in a low, and now it's put in a new high. So this would be the swing where you would want to put your stop. What's also nice about this is that you have the 200 EMA. That's going to be the white line right there. So now it comes up, kind of chops around, finally makes a new high. And so then, I'd put my stop here and so on and so forth. And really, I'd be looking more towards the 21 EMA, the green line, as to where I'm wanting to trail. So, put it right there, comes back. You wouldn't want to put it there because it didn't make a new high. We saw a bounce, but it didn't break the high to make that an official swing. So it comes back down right in between the 55, which is the yellow, and the green, which is the 21. And then we go on to make a new high. So that's where you put your stop, stop, go there, stop, go there, stop, go there. And you can see how accurately that's able to time the top. Now, let's say that based on other analysis, or perhaps it's just getting close to where you believe that your target is. Well, that's whenever you can start to trail the candle body lows. And so what I mean by that is, let's say that I have an idea of where price is going to end up, somewhere between 20 and 25,000. I remember when we were here at 19,000 on Bitcoin, everybody was shouting, "Oh, next target's 25,000. That's the next critical resistance because it's a quarter of 100,000." Everybody thought it was going to go there. They were sure that it's going to go there. Well, what I would do is I would come in there and I would start trailing below these candle body lows. That way I don't get trapped in a whole bear market, right? So, and then even, as it's getting closer, I'd be getting tighter and tighter and tighter, because what you don't want is, if you're getting really close to your price target, say it's 25,000, right? You don't want to watch that thing go all the way back down, right? Or even watch it come all the way back down to your swing of 5,000 and then you get stopped out, right? Because, okay, well, the low there's 3,000, right? So you might as well just hold for the next bull run, right? So as it gets closer and closer to your target, you want to get more and more aggressive, right? Because you don't want to give that profit back to the market. So you want to be more aggressive with trailing your stop, right? So that's how I approach all of my um, all my trades pretty much. There are certain circumstances where I'm strictly scalping, but if I'm going to have a runner or a swing trade where it's going to go for many months or days or hours, I will trail the swings, and then whenever it gets close to my target, I'll get more aggressive and start trailing the candle body lows. Um, Now, the reason why I say that timing tops and bottoms is bad is because the market can go farther and longer than you could ever imagine. You always hear people talking about, oh, okay, well, this is the year that the market's going to crash, 50% correction, blah, blah, blah. Yes, if you're extremely good at doing analysis, you can, but the fact is, most of y'all aren't. I wouldn't even say that I am, and I consider myself to be a professional trader. I'm fairly good at it, but I wouldn't say that it's not like, okay, well, it's going to go to $3,000. Boom. That's where I'm putting my target, and I'm 100% confident. You look for signs of reversal. But in a trade like AMC, where, timing, it, if you're trying to time it, right, and you say, well, I think it's going to go to $10,000. That's my price. Why do you think it's going there? I mean, truly, why do you think it's going there? Because somebody on the internet told you that it's going to 10,000? I mean, I'm not trying to come across as a jerk by the way that I'm saying this. What I mean to say is that nobody knows how high it will go. I personally would be shocked if it went over 10,000, not because it can't go there, but because I strongly think that uh, the government will just step in and stop trading. Look, this is getting out of control due to fraud, corruption, malpractice, yada yada. So we're going to go ahead and do a settlement with everybody. It's going to piss everybody off, but they ultimately don't care. They're the government. When have they cared about pissing people off? So just from a realistic standpoint, that doesn't mean it can't go past 10,000. What I'm saying is that it's smarter, especially whenever you're dealing with a paradigm shifting amount of money that you could be making, to not give that money back, right? You want to be able to, if you're up $5 million, let's say, or $1 million or $500,000, and that is really close to where you're wanting your profit to be, well, start trailing your stop. Get up there, get ready. Now I do want to say this because this is very important. When dealing, well, my mic's about to go out, so if it cuts, this video is going to end real soon because I have Bluetooth. So with market orders, there can be a liquidity gap in the market. And so what happens is if you execute a market order and the price is at, say, $1,000, you could end up getting filled because there's a gap of liquidity at, say, $500. So that's a real issue. So I wouldn't be trailing my stop on this trade with market orders. What I would be doing is I would be visually trailing my stop. This is how I'm going to do it. I can't tell y'all how to do it, but I would be visually trailing it so I can exit with a limit order when I need to. Um, because like I said, if a lot of people go in there and they start trailing their orders with market orders, what these hedge funds could do theoretically is they pull liquidity because they're going to be the only ones buying. And so if they see a bunch of people trailing their stops, let's say they were trailing them here, right? Or let's say here, for example. Well, now let's say they pull all their buy orders, right? And they see that these market orders have just been hit. Well, what they're going to do is they're going to begin. A market order will purchase or sell shares where the next available purchase price is. So what they could do is, those market orders get hit at a certain level because they can see the orders. They pull their buys, price drops pretty hard because there's no liquidity in the market, meaning that they aren't looking to buy shares, and it goes from 1,500 to 300, and that's where the shares get filled at. So you got to be careful with market orders. I'm not going to use them. I'm most strictly using limit orders. I think that's going to be very important with exiting this position because a limit order guarantees a fill at that price, right? I mean, if it's going to fill, it's going to fill at that price that you put it, say $1,000. It's not going to fill you at $10. Um, so I think that's very important for people to understand. Um, but like I said, with timing the market back here on Bitcoin, everybody's here, it's like a donkey and a carrot, and a lot of things in life. It, I've been a wealthy man and I have been a poor man, and the happiness doesn't really change. Um, I forget what they call it, but basically, whenever you get to a certain point, like let's say that you get a new car, well, now you're at a 10, right? But after 6 months, you're back kind of at a 6. It, People and greed and trading, it's kind of like they're just chasing that carrot. It's always in front of them. They're always going to want more and more and more. And the problem with that is that you're not always going to get more. All these people on Bitcoin, they're sitting there, oh, it's going to 25,000, it's going 25,000. And instead of managing their position, they had, a lot of people got stuck carrying through this entire bear market, and now they're just finally, 3, 4 years later, they're just now into profits. So, um, I think it's really important to manage your risk. Make sure, for me, I'm not going to be using limit order, or I'm not going to be using market orders. Um, and I'm not going to be greedy. When it gets to the price that I'm happy with, I'm going to exit my position, and that will be that. I'm going to base it a little bit more on what's happening in the moment. But there's in trading, especially, there's always going to be that you're going to be sitting there looking at the screen. Say it's at 3,200. Well, I think it can go to 3,500. I think, okay, well, now it's at 35. Well, now I think it can go to 4,000. Oh yeah, it's at 4,000, and you're chasing that high. But what you need to do is take a step back and remember how much money you've made, and in a split second, it could all disappear because it's a squeeze. As soon as there's a lack of liquidity, that price can drop back real fast and that money's gone. So I'm just trying to put a healthy perspective on things for people because I think there is a lot of euphoria around this trade with people that are hoping to, hold to these astronomical numbers of like 500K. And I don't want to see people miss out on, life-changing money because, this trade itself is already a home run type trade. It's phenomenal returns, but to sit there and hope for 500K, or I mean, they just keep raising it. And it's like, there's not enough money in the planet to pay for that. I don't know where these people are getting these numbers from. And certainly, I mean, there's not enough money. The government, the people in power will simply not pay it out. They just won't. It would crash the entire. They're not going to sell off all the world's assets just to pay 2 million people. It's just not going to happen. Um, so that's why I'm just trying to put a healthy perspective, give people an idea of how to manage your trades. And if you're a trader in general, I imagine most of y'all aren't because you're kind of following this EMC movement. But if you are, this is a very useful video as far as helping you to improve trade management and whatnot. Anyway, hope this helps and take care. Bye.